Solana has run from just a few cents to over $100, and this has a lot of people asking the big question. When the end of 2025 rolls around, will you hold enough Solana to be happy or to be kicking yourself? I'm Brett at CryptoGX, and I'll explain very simply what Solana is, how it stacks up against Bitcoin and Ethereum, its biggest wins and weak spots, why big market trends and ETFs matter, and clear percent and dollar targets, so by the end you'll know the right allocation or the amount of SOL that really balances growth and safety. So let's set up a simple plan before picking our numbers. Most financial advisors or coaches are going to say that crypto should stay a very small percentage of your entire investment portfolio, usually about 1 to 2%, sometimes up to about 5% of your entire investment allocation. So with this, you still have plenty in safer things like index funds, regular stocks, or bonds. Inside of this tiny crypto slice, put your core steady coins, such as Bitcoin and Ethereum. Anything left over is what you'd call your explore bucket. This is where Solana can live. But why do you want to keep Solana in a smaller portion of your entire portfolio? Well, the main reason is because it's very volatile or the price jumps around a lot. A recent CME report shows that Solana moves nearly twice as wildly as Bitcoin and 1/3 more than Ethereum, scoring about 80% price volatility in just 3 months. And volatility is just a fancy word for big, fast price swings up or down. It's very fun on the way up, but it's really scary on the way down. So our framework is pretty simple. First, decide the entire crypto slice that you want to have of your portfolio. Then split it into the core Bitcoin and Ethereum sections that you want to have, and then your explore section. In the explore section, fit Solana into this based on your comfort level with all of these wild swings in the price. So to see where Solana fits inside of that explore bucket, let's stack it against your other choices. As I briefly mentioned before, over the last 3 months, Solana's price has bounced around with about 80% realized volatility. This is almost twice the amount that Bitcoin moves around and 1/3 more than Ethereum moves around. Now, to contrast the crypto market, long-term index fund stocks, which are basically simple baskets of companies like the S&P 500, they tend to return about 10% per year, while typical US home prices climb only 4% to 8% yearly, and they move much more slowly. So with that in general, Solana acts more like a turbocharged tech startup. It has big upside and then also has big drops. Bitcoin and Ethereum sit in the middle. They're still risky, but they're definitely steadier than Solana. And stocks plus real estate form the calmer base of most portfolios. Knowing these risk layers helps you size up your Solana portion in a smart way. The most wild assets will typically be recommended to have a smaller slice in your portfolio. So now to decide if the small Solana slice of your portfolio could really grow, we need to see where the chain is headed, the stuff that's happening on the actual blockchain. Part of the on-chain data is based on the activity, and the usage really keeps climbing. Solana hit 120 million daily active addresses in October of 2024, and a record 138 million transactions in one day that December. That just means people that are actually moving tokens, not just traders that are watching prices. Now, money in general is also flowing to Solana as well. DeFi apps, or decentralized finance apps on Solana, now hold nearly $10 billion in total value locked, or TVL. And TVL is just the cash and coins that are kind of parked inside those applications. Developers or devs and just people building on Solana also aren't slowing down. An Electric Capital study shows that Solana grabbed the #1 spot for new developers in 2024, which was up 83% year over year. And even big firms are taking notice. Asset manager VanEck says that Solana could top $500 by late 2025 if growth holds. So put these numbers together and it really shows a blockchain that is very much gaining speed still. So rolling with that information as a framework, here's how the numbers kind of shake out for 2 starter size portfolios. Most beginner portfolio guides will still cap the total crypto that you have in your portfolio to about 5% of your total investments. This is so that big drops in prices never really wreck your long-term holdings. Inside that slice, Solana belongs in what we call the explore lane because, as I mentioned, it's 80% 3-month volatility. And because of that, we're going to keep it in that section of our portfolio that's much, much smaller. So in our example here, if we have $1,000 in total crypto investments, you might want to hold somewhere between 1% to 20% of that in Solana, depending on your risk tolerance and how much you believe in Solana. If you're going to be cautious, I would say use about 1%. In this $1,000 example, that would be $10 of Solana. If you're going to be a little bit more balanced, then I would up that to about 5 to maybe even 10%, which would be about $50 to $100 of your $1,000 $1,000 crypto investment. Now, if you're going to be more bold, more risky, then I would say probably about 20% of your portfolio should be in Solana, and that would be about $200. Now, if we have a little bit more invested into crypto and we want to increase those numbers, our 1% is going to be turned into $50, our 5% is going to be $250, and our 20% is going to be $1,000. So I understand that $10 or $50 of Solana sounds pretty small, and you might not be thinking that really matters, but really even that tiny amount could make a difference for some people. If that $500 price target from VanEck happens within 2025, a $100 balance in Solana grows to about $300, which is a triple of your investment. But also the same coin could also dive 50%, turning a $100 investment into $50. So based on this, you want to size your slice of Solana so that either outcome feels okay and is palatable for you. With all of this in mind, make a checklist before you buy any Solana. Set what I would call a pain line. If Solana dropped 80%, would that loss change your life, or would it just sting a little bit? Also use weekly buys. So spread your purchases out evenly over time so that you avoid bad timing on the price. Let's say right now Solana is $150 and next week it goes down to $100. Well, if you bought half now and half then, your average price is $125. So then when it goes up inevitably, then you have a better price point to start off from. Also, make sure to rebalance at least yearly, if not even every half a year or quarter. Basically, this means if the price of Solana doubles and you had your allocation at 20% of your portfolio, now it might sit at somewhere around 40% of your entire portfolio. This means that you should probably skim some of your profits, sell some of that Solana, redistribute it into the other coins that you're holding so that it only constitutes 20% of your entire portfolio. By anchoring your Solana to very clear percentages and dollar figures and adjusting with some simple rules, you give this fast moving coin and volatility some room to shine without letting it entirely destroy your entire portfolio if something happens in the short term. Now, before jumping in, it's important to know the good and the bad about Solana. So let's look at the strengths first. Solana can push up to about 50,000 transactions in a second, and each one costs a fraction of a cent, 0.25 cents as a matter of fact. Now, its developer crowd is also booming. About 7,600 new developers joined in 2024, which was an 83% jump that beat every other chain. Plus, the Solana network is also backed by a huge network of staking validators, which is currently at about 1,400 or more. And all of this is great, but we also need to look at the weaknesses of Solana. So Solana has had some issues. It stalled before. A bot flood in 2021 froze the chain for 17 hours, and then some smaller hiccups hit in 2022. You can check out a complete history of the Solana outages on helios.dev, and there's just a lot. It says it's a 24-minute read, but you can skim through them. You can control F the years and then do a little bit of read the summaries because they're not that long, but mainly find out how long they were down. Some critics are also noting that the validator note, that 1,400 number that I mentioned before, is still lower than Ethereum's, and some call it too centralized currently. So knowing this helps you size your slice of Solana based on the risks. Now, zooming out from Solana itself, the big money and the wider economy also push your slice up or down. Last June, the fund giant VanEck that I mentioned before asked US regulators to list the first spot Solana ETF. This is basically a stock-like fund that lets anybody buy Solana in their normal brokerage account and not have to actually buy the Solana itself. Basically, it gives access to regular investors to Solana, need to be very techie, or if there's any sort of regulations where they can't actually buy cryptocurrencies, they can hold the value of crypto in ETFs. And with that VanEck announcement, regulators are still deciding. They even delayed Grayscale's similar request until later in this year. We're hoping for something at the end of June here, but who knows? The door is still open. Besides regulations, real companies are already using the chain. Visa now settles USDC, which is a dollar-pegged stablecoin, on Solana to pay merchants faster. Now, macroeconomic trends matter too. The US Federal Reserve hints that it could cut interest rates later this year if inflation cools off. And cheaper money usually lifts risk assets like crypto. On top of all that, most people probably already know that Bitcoin went through a halving in April of 2024. A halving, if you don't know, is basically when the reward for Bitcoin gets cut in half going forward. A halving in past cycles often sparks a broad crypto rally about a year later, and we've obviously seen that play out in the end of 2024 and early 2025. So putting all of this together, the rising institutional access and friendlier money cycle could give even a small slice of Solana some extra fuel to grow. So with rate cuts likely starting mid-year, giving risk assets fresh fuel, and a spot Solana ETF already on the SEC's desk thanks to VanEck, even a small Solana position could ride the next wave. And then when you add in the Bitcoin 2024 halving, a event that has traditionally kicked off past bull runs, and we've seen that happen, this is looking very, very strong. So stick to the game plan that we built today. Total your crypto as 5 to 10% of your total investments, 10% being on the high end, 5 being still kind of moderate, and then 2 to 1% being low. And then inside of your total crypto portfolio, give Solana about a 1% to 20% chunk of that entire bit. And I know that's a wide range, but it really depends how risky you want your portfolio to be. Just make sure to buy bit by bit over time, check your slice once a year, and let time plus growing world demand do the heavy lifting. If you're ready to get started and buy a little slice of Solana, I put some links in the description for Coinbase and Crypto.com where you'll get $50 in crypto just for signing up with those links. And if you want to get into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed this video, make sure to hit the like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.